Good morning, gang. Good morning. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. It's just for educational purposes only. And that's out of the way. Let's jump into the Bitcoin chart, shall we? So, obviously, we're going to keep it to what we do best. No bullshit, no nonsense TA. Obviously, what you guys come for. No Moonboy stuff, no Doomboy stuff. We're just trading the charts. We're trading what we've got in front of us. So, as usual, what we're going to do is we're going to jump in to the low time frame, follow up where we started last week, which was around here, and then explain, obviously, what's happened, talk through last week's trade setups that we've had in the group, why we've taken them so you guys can learn from it, and then we're going to look at what I'm looking for next. Okay, so it's an important stream, is this. So, first and foremost, obviously, on our last YouTube update, we've been banging on about this for a while now, about these equal lows. So you've got equal low all the way across the board, and then eventually it gave way. Now, this is, I'm going to let you into a little secret here. When you're looking at triple bottoms, or even double bottoms and double tops, you get a lot of pattern traders that get very excited about it. And what they'll say to you is, oh, it's a triple bottom, it's a strong bottom, that's the strongest support you're going to have, or likewise if it's resistance. That's it, you take a trade from this, you see this reaction, oh, you've seen it happen again, oh, you've seen it happen again, right, that's just all piling along here. It's all piling along, super strong support. And this is how you can filter out traders and non-traders. Okay, this is how you can tell who's an influencer and who's a trader. Because anyone that's telling you to long a triple bottom is most certainly an influencer and not a trader. And if they are a trader, then they're a particularly bad trader. Now, why do I say this? Okay, I say this because, like I said on last week's video, if you go back and watch it, there's resting liquidity all the way below this now. So when you get patterns like this, one low. So where do you think this person's stops are? Well, this stops are under here, okay? Huge group of traders, even some big traders. Same with this one. It's happened again. So there's going to be more stops. So now we're piling up stops. Oh, look, it's happened again. More stops. Okay, so therefore there's loads of resting liquidity below this. You don't need an order book to see that. You can do this straight from the chart. So once again, this is why you can tell who's a trader and who's an influencer. Because an influencer will say, strong support, up only now, long. Okay, it's proven itself as great support. A trader will be saying, right, well, if we're going to turn around at any point around here, then likelihood is we're going to run these stops and then go up, which is obviously what I was banging on about on last week's video. So if you paid attention to that, then well done, you probably saved yourself some capital, and you might have caught a trade in the end, right? So it's just a little bit of a heads up there. You find out who's an actual trader and who's not. So this is moving into Thursday's plan. So obviously I was talking on last week's video how I did take a long initially off the market structure break, and I said that I'd taken take profit 1 and my stops were to entry. Okay, in the end, this came back down once again to roughly the same level, creating a higher low once again, and then we had another pump up. And I'm saying to the guys on Thursday in the group, my lower areas of interest remain unchanged, i.e. down here, taking the lows, but for resistance, the single prints from Thursday, unless we get a clear swing failure pattern of Sunday's high. Okay, so that's what I'm saying. So in the end, we came up. Now, where was Sunday's high? Sorry, Sunday's high is back here. We didn't get a swing failure pattern of Sunday's high. We had no reaction at all, and we just continued straight up. So we went straight up into the single prints. Now, as I've said time and time again on this channel, some people will refer to this as a 30-minute fair value gap. Some people refer it to, well, there's loads of different names for it. It's where people start renaming existing technical analysis that's existed for years. These are single prints on a 30-minute chart. There's no need to rename them. They're single prints. They're based on TPO theory. If you want to understand TPO theory, come join our course and I'll teach you all about TPO theory and how these single prints work. Sometimes you go straight through them, sometimes can act as resistance. In this instance, I was understanding that these are likely resistance in this instance, which is why I'm saying that this is the local resistance. Right, so then that moves us on to, let's zoom out to this, to the 15-minute chart. Onto Friday's plans. So Friday's plans, we got the move up and we stopped at the single prints as mentioned in yesterday's plans. Good reaction for a scalp short. So what I'm saying by this, well, we came up, then we had a drop down, good reaction in the end. We had a drop down, back up into the golden pocket, we had a good scalp short there. And I'm saying now it's time for patience, in my opinion. If we continue to range here, and then swing fairly pattern the highs, I'll take a new short. So i.e., if I get stopped out of this when it comes up and takes the highs, I'll look for a new potential entry, or I'll wait. If we get acceptance back into the single prints, then I'll wait for the algo pocket above. Okay, which is up here. Now I'm saying technically yesterday wasn't a double distribution day. However, the profile still resembles one without the single prints. Couple this with the 80-20 setup. If we start to get acceptance back into previous day value, then I'll be looking for a drop down towards previous day POC region. Now in the end, we ended up going straight through previous day POC into previous day value area low, fulfilling the 80-20 trade setup. So that's what we got in the end. Now obviously this short ended up running even further than that, but initially that was the plan. And I'm then coming into the group, and I'm still saying I still feel those equal lows are at risk, but once again, that doesn't mean it has to go instantly or at all. Okay, so therefore I'm playing both sides. If the single prints, if the equal lows don't get tagged, then fair enough, I was wrong on the idea, and up we go. But there's just a higher chance of those equal lows that I mentioned right at the start of this video being swept. Now, traditional markets also gapped up through the night, keeping an eye on my swing shorts, because I am swing short on the S&P and the Nasdaq. And I'm also saying nice on Dixie today, as this weekly close is important, based on weekly market structure and setting the stage for next week. Okay, so again, this is talking about Dixie, this is talking about traditional markets, but Dixie does sometimes affect Bitcoin, which is why I'm giving the update. But obviously in the group, I also do discuss trades for Forex and traditional stock market. Okay. Now, in the end, obviously, this is the 80-20. This is obviously the screenshot of it that we ended up fulfilling. We came down through the previous day POC, which I mentioned here, and we actually came into the value area low, so we actually fulfilled that fully in the end, then ended up holding on to this even longer. Now, Monday's plans, very simple. Obviously, the weekend happened here. Monday opened up. We got a nice little rise up, and then we ended up having the drop. So, support clearing out the triple bottom. All my lower AOIs note the naked point of control at 24,921 and the 24,366 daily, which is lower down. So these were my key levels. So obviously this naked point of control is a perfect level for taking out these lows. Now bear in mind, I talked about this on last week's video. We had this week here, which only happened on Bybit and a couple of other exchanges, but the main exchanges, okay, some of the higher volume exchanges didn't have this wick, and CME didn't have this wick either. So this low here, in the end, actually cleared out all the lows on other exchanges, including spot, which is why I preferred this low. So, if that offers nothing, then level to level until we see our areas of interest below, which is fine. Obviously, in the end, what did we do on the Monday? We came down, hit the naked point of control, had a good bounce. I was saying to my team at the time, still being patient, I'm still not rushing into anything, and in the end, what did we get? Well, we just got another swing failure pattern. This pattern here. So, had the reaction, came up, a load of longs came into the market up here, a lot of positions opened. Now, bear in mind, at this point here, this second week down here, we had a lot of shorts coming into the market. Obviously, what people are seeing is people are seeing a breakdown, a big long candle. Let's zoom out to the 1 hour, you can see this big long candle. So what do people do when they see a big long candle? They try to chase it because they think it's going to continue. Now, one thing that my members know is when continuation traders turn up, or when momentum traders turn up, that's the time to look for reversals. So what happens here? Well, anyone that's smart is shorting highs. Anyone that's fairly new to trading or hasn't got any experience will be looking at this breakdown and going, right, it's going to continue, it's going to continue. So they're going to start shorting here. But it's, I mean, you can look at it, just look at it. You don't need hindsight analysis for this. If you're taking a short position there, well, where are you putting your stop loss? Up here? Well, in that case, just to get a one-to-one return, you need to be dropping down here. I mean, what? That's not a trade setup. That's a terrible trade setup. What's a trade setup is up here and targeting down there. There's a 5R there. So you got 5R there, or you short after a big flush, high volume flush, and you're shorting down there. Well, what are you targeting? You're targeting 5R from there. You just want it to go in a straight line. Markets don't move in straight lines. Okay, you need to learn from these mistakes. if you're still doing that. And I expect that a lot of our viewers don't do things like that, but if you do, then give your head a shake and learn from it. Right, so that's what we've got in the end. Obviously, we've got the swing failure pattern, and then that moved us into Tuesday's plans. So Tuesday's plans, obviously, we got the swing failure pattern, we got the trade, we got the long. Great. Bear in mind, this particular setup has happened time and time again over the last few months. Happened here, happened here, happened here. It's happened quite a few times at lows. The same pattern. It's just swing failure pattern after swing failure pattern after swing failure pattern. You need to understand how to trade them. You need to understand what you're looking for with your volume, what you're looking for with your breakout traders, how to counter these people. But once you start to understand this, then you actually get some really nice setups. So, obviously, holding on to this, we ended up coming up here, and by the time I'm giving the update on Tuesday, I'm saying nice swing failure pattern last night, giving us something to work with on pre-close session. Okay, and again, this couldn't have been a more perfect setup in my opinion, and the beauty of it is because New York closed, pre-close session opened up, swept New York's lows, and then reversed. So just an absolute perfect setup, and that's something that we teach in the group. Now, weekly open should have been take profit 1. Now, today's TPO chart looks like a double distribution day. Now, this is what I'm doing when I'm coming into the group on Tuesday morning. It looks like a double distribution day. Now, if you don't know what double distribution day is, we've talked about this on the channel a fair few times, and what that's referring to is the BART pattern, as it's most commonly known to, but in TPO theory it's a double distribution day. So I've taken a short this morning as a hedge, so I did take a hedge short. Now I'm saying resistance, if we continue up, then the daily around 26.2, which is this region here, which is obviously where price did stop out at, and now we're looking, have we flipped this and we're going to go higher, but we'll talk about that soon. So this, I took a loss. I lost 1R. Okay, so anyone that doesn't understand how to trade will say, "Oh, Spit, you got wrecked, you got destroyed, you lost all your money, you got liquidated." No, I lost 1R. So I lost a predetermined amount of money. The amount of money I was willing to risk to take that trade to potentially give me a 4R setup. Okay, so in simple terms, if you were risking $100 here, then you're looking to get a just over a $400 return. Now, in the end, got stopped out. Okay, so whatever your risk is, that's what you just lost. You don't go all in at every single trade. And this is one thing influencers don't want you to know about, is they want you to think everything's all rainbows and Lamborghinis and mansions and all that shit. But it's not. Okay, we all take losses. We all take losses. I did take another scratch of a loss up here, because we had a nice swing failure pattern up here, but then we've not changed any structure in the end, and we're continuing up. So I did actually take less than a 1R up here loss, but that's fine, because this trade down here is more than making up for it. So I'm still sat within that. I have taken a bulk of the profits out, but I still have a tiny amount left that I'm letting run. So that's making up for it. So therefore, you let your winners outpace your losers. So anyone that leads you to believe that you don't take losses in this game, bear in mind I've been doing this full time for years now. I take losses every single week. I have winners every single week. Anyone that leads you to believe they've got a 90+% win rate permanently, they're talking out their ass. They're probably just trying to sell you something, or get you onto their exchange, or sell you a shitcoin or whatever. Okay? If you've been on Twitter the past week, you've seen all the rugs and the influencer deals and everything else. Right, so that leads us to where we are right now. Okay, so before we continue, quick shout out to today's video sponsor. Thanks to BingX for sponsoring today's video. So if you don't know who BingX are, they are a crypto exchange where you can not only trade crypto, but you can also trade FX, commodities and stock indices. And any of our members or any of our long-term followers that know us know that we use BingX to trade FX and stock indices and commodities, because that's a big part of what we trade in the group. It's not just crypto. When crypto markets are flat and boring, we do tend to trade quite a lot of FX, as an example. Now, obviously, if you do want to support the channel, then there's a link down in the description. If you use our link, you can get up to a $5,000 deposit bonus. And the first 100 people that sign up will also get a $100 free trade. Okay, complete risk-free trade, because it's $100 on them. Okay, so obviously if you want to check out BingX, then check out the link in the description. And before I forget, it's a no KYC exchange. So if you guys live in a country where you can't use KYC, i.e. the US, then BingX are an option. Right, moving on. What am I looking for next? So, to answer your question, I am still in a long. I am still in a short. Now, which one wins in the end? Both have had profits taken. Which one wins? Well, that's the beauty of being hedged. I don't have to guess. I can sit and let the market show its hand. So, first and foremost, the top range. Secondly, the bottom range. The only two ranges you need to know about for now. The ranges above, we don't have to worry about because we're not there yet. Below this, we don't have to worry about because we're not there yet. These are the two key regions. Okay, so this is what I'm looking at right now. Right now, we've lost no structure. We're still in a low time frame uptrend, although high time frame, we are still making lower highs and lower lows. High time frame. Low time frame, we have switched around. So what am I looking for next? Well, first and foremost, do we get acceptance back in to this top range? Or do we just quite simply just get a deviation and then continue trading this gap between the ranges, which effectively is a range by itself? So that's first and foremost, that's what you got to ask yourself. If this happens, and then we roll over, then there's potentially a short trigger. If this doesn't happen, and we do get acceptance back into this range, then we're coming up. Now, our first sticky zone that we've got to contend with is this sticky zone right here. Can we flip that into support and then continue up, or do we get a rejection here? So that's one option. The second option, if we do continue up, then this now becomes the main sticky zone, in my opinion, because this is a big sticky zone. Now, no matter what trading style you've got, whether you're a order block style trader, supply and demand trader, confluence trader, Fibonacci trader, Elliott wave trader, it makes no difference what style you are, you're all going to be looking at that area, because that's a key area. If you can flip that, then we can be looking for range highs. But this is a key region, in my opinion. Okay, if we get some sort of good reaction from this, then yes, I will be looking to add back in to my swing shorts. If we don't get a reaction here, oh, didn't mean to go back that far. If we don't get a reaction here and we continue up, then we can be looking for range highs. If we get to range highs, well, simply we just trade in the range, or we're going to see the highs being swept. And that's it. Very simple. So that's to the upside. And obviously, if it does end up breaking out of the top range, then, like we've said before, then I'll be looking for this region here, which is around the 38 to 40k region. I've been talking about this many times on the channel. Now, what happens if we start to roll over? Well, if we start to roll over, then this old macro range high needs to hold. If it holds, then again, we're just trading this range. If it doesn't hold, then I'm going to be looking for some lower prices. So if we do take out these lows, and then more specifically, this low gives way, which is 23,900 for easy numbers. If that low gives way, then unfortunately, I am going to be looking down towards the EQ / these lows down here. There are a couple of SR levels in between this, but they're not high confluence SR levels. So if this does happen, then we can look at reactions at these levels in between and see if we get anything to work with. If not, then EQ / these lows. Again, like here, loads of liquidity. Loads of liquidity. And if that gives us nothing to work with, then we're just looking at range lows. Does that give us something to work with? Yes, no. If no, let it roll over. If yes, got a long trigger. But either way, we are still range bound. We are still range bound. Even when we crack this top level, we've still got previous ranges to contend with. Range. Gets above that, great, cool. Next area to contend with. Next area to contend with. And then overall highs. So we've still got lots and lots of resistance above. So anyone that's thinking it's just, up only, bull tard, whatever you want to call it, yeah, you've got a lot to learn. There's going to be some significant pullbacks. And if you are holding a big spot bag and you get pullbacks here, likelihood is you're looking at a low time frame pullback and you probably get shaken out of positions. Or you won't understand how to hedge your position. So if you are holding spot from lower, which I am holding spot from lower, I will still look to hedge my longs. So therefore I'll be looking for shorts. Because what if this isn't the macro low? Okay, that's looking on a macro time frame. What if it isn't the macro low? It could be, but what if it's not? Always got to have all options open. You can see here down the side, I don't know if you can see this on your screen, I've got various Elliott wave counts. I've got primary bulls, primary bears, and then I have alternatives. Because I have options for up and I have options for down, which helps me then spot the ranges so I can trade a range and also hold or cut swing positions. Okay, right. Hopefully you've learned something today. I've rambled quite a long time. Apologies. If you have learned something, hit that like button. And if you're not subscribed and you're new to the channel, consider subscribing. And obviously, if you do want to learn how to trade like us, and obviously understand double distribution days, TPO theory, single prints, and everything in between, the key swing failure pattern setups that's been happening time and time again, come over to our website, spitfiretraders.com. Free Discord's right here. And obviously, if you want access to all the trading material, then come join our team. And I finally updated this to show over 30 hours of study modules. So thank you to the guys that reminded me last week. So for the grand old price of £60, 60 Great British pounds, or $59.95, then you get access to all this content, including my daily trading plans every day of the week, aside from the weekend, although I do give you the weekend thoughts. And obviously that covers both Bitcoin, altcoins, FX, the stock market, commodities, everything that I look at, everything that I trade, you get to see. Okay, so obviously if you want access to that, then come along. Right, until next time, gang, as you were, bye-bye.